Hey guys, it's that Dividend guy coming at you with another video. So today I wanted to talk a little bit about the bank that I would pick if I had to be in the financial sector, or if you said you have to buy one of the five major banks. JP Morgan Chase would actually be the one that I would pick, and there is a reason for that. So one, they have the most assets under management. And on top of that, if you minus out their liabilities, they would still be in a healthy spot. So they would still be operating at a really high margin. They'd still have a lot of assets. They write great loans. Management knows exactly how to run the bank consistently and profitable. So they're really worried about profitability. And the thing is, when you look back, JP Morgan Chase has performed in the top tier of banks during each of the financial crises. So the 2008-2009 banking crisis, when all the banks were going down. There's honestly in The Big Short, it's one of the best parts of the movie. But that's one of my favorite movies because it illustrates exactly what happened. But Bear Stearns went down. Morgan Stanley was having issues. Goldman Sachs had issues. JP Morgan Chase, out of all the five big banks, performed better than the others. And as well, during the financial crisis, they had the most assets, which means that they were the best at managing their money. So that really does give me confidence in owning a bank. Now, personally, I am not an investor that understands banks, but there's something to be said about how well it's been managed. And so when you compare it to other banks, like I'm going to go through real quick here and kind of show you exactly what's going on right now. Of course, with SVB and that bank, I think that it could be possibly closing. I think the Fed took it over, so it's not going to close. But that would be, or it was, the biggest closing of a bank since the financial crisis. And so right now, JP Morgan and Chase has the best asset versus liability ratio out of all of the big banks. And so I wanted to go ahead and kind of show you what's happening with the other banks and really solidify why I would be picking JP Morgan Chase. Now, keep in mind, when we look at these charts, that's not the only thing that I've done research on with these, but that is a swaying factor of how much they were hit. And I actually would be picking, if I was doing a value play, I'd be picking a different bank. But there are certain things that I think you should pay up for. And I think the management, the consistency, of course, the dividend growth as well. All of the big banks had their dividends frozen, right? They weren't cut, but they were frozen. And so they couldn't increase their dividends. They had like a cap on how much I believe that they could lend out. And so even during times of crisis, JP Morgan Chase has still rewarded shareholders. They've done stock buybacks, they've done dividend growth as well. But even during those hard times, they're still way heavier in the asset category than they are in the liabilities, which means that they're writing good loans, they're doing good business, they're not over leveraging themselves or making dumb plays with their money. They know what they're doing, and it really shows. And let's compare that to the other banks in the sector. So as of right now, JP Morgan Chase, let's take the worst statistic out of them, all of them, right? So for the month, they're down 12.5%. Let's compare that to the month for every other bank that we could possibly buy, that I would be comfortable buying. So I took a look at Citigroup. Right now, Citigroup is down 15%. So Citigroup right now does have a pretty good ratio, has a nice payout ratio. They, of course, had more assets than liabilities, but it wasn't as good of a ratio as JP Morgan Chase had. But they are down a little bit, 3% more in the month than JP Morgan Chase is. But again, guys, I would buy the biggest behemoth in this sector because I'm not as confident when it comes to big banks. After Citigroup, we've got the bank that Warren Buffett's big on, which is Bank of America. They're down nearly 21.5% in the past month. So again, even though they are a well-run institution, they have more assets than liabilities, they are affected more. And I think it just goes to show that it comes down to people are more confident with JP Morgan Chase than they are with Bank of America. Next, we've got Wells Fargo, and this is a bank that I've owned. I myself sold out of it a few years ago after they cut the dividend because they got sued, or they had a bunch of like federal issues that they had with faulty accounts. And so I bought into that weakness thinking, oh, it'll turn around, it'll be great. And I got out after they cut the dividend because I lost faith in the bank. So They are down 23%, and this is one of the banks that Buffett has completely sold out of. I think he just got sick of the BS with the bank, to be honest with you, which I don't blame him. I got sick of it before he even did, so I completely understand. But again, with the shaky management, apparently management knew about the faulty accounts. They didn't act on it. And it just, the way that it was run was pretty shady, to be honest with you. I think that Wells Fargo should have gotten a bigger hit than a bigger fine and a bigger hit to the company than what happened. But the thing is, it left a lasting impression. I don't want to put my money in this institution any longer. Neither does Buffett. When you lose, here's the thing. Buffett has owned banks for decades. So the fact that he sold out of Wells Fargo, and I believe it was the longest bank holding that he had purchased, it was one of the first ones that I believe he purchased in the financial crisis, and he had a very sizable position of Wells Fargo. He sold out of it as well. So here's the thing. When you perform poorly in crisis during black swan events, they did okay, but they did not have the financial stability or the powerhouse management decisions either that JP Morgan and Chase had. So here's the thing. When you compare the two banks, Wells Fargo had a crisis. They had a scandal. They didn't do well in the 2008 financial crisis. They also didn't do well in the COVID pandemic. They didn't perform well. And Buffett sold out, so he's lost faith in this bank, and that says a lot. When the Oracle of Omaha no longer wants to do business with you, investors run. Next, so of course, Wells Fargo is off the list. Next, we've got U.S. Bank, and this is one that I personally use U.S. Bank. But again, Buffett has been trimming his overall position, and this is one that, while there hasn't been as many scandals as there has been with Wells Fargo, when I looked at the asset to liabilities, if you cleared out their liabilities from their cash position, it would make a pretty decent dent with U.S. Bank. And what that means is they are not managing, they're managing okay, but it's not as clean as JP Morgan and Chase, and that does show. Next, that is all the banks. But next up, I just want to kind of explain why I would choose JP Morgan and Chase. So they don't have the scandals that Wells Fargo had. US Bank, I don't like the performance. The dividend growth has been subpar. Bank of America would be the next pick. So if I was going to, JP Morgan I would pick because of the stability. I trust the company. I love the management. I like the history of the company. But if I was going to make a strict value play here, I would be going for Bank of America. Because even though Wells Fargo and U.S. Bank have had bigger dips, 27% and 23% respectively, Bank of America, I feel like, for the dividend and dividend growth rate, is a better deal. So Bank of America would be my pick if you said, hey, dividend guy, which one are you going to pick on a value basis? It would definitely be Bank of America. But for stability and peace of mind, sleeping well at night, I'm picking JP Morgan Chase. So we'll see how the big banks kind of sway through this. Excuse me real quick. Had to get a little drink of water there. But I would pick it because of its financial stability. The assets under management have been very well managed. And the CEO is, I've done a lot of research on Jamie Dimon, and I do like the way he runs, how he came up, and I do like his business acumen and how well he runs the business. I mean, he's had the CEO position through, I believe now, 2 black swan events. And, he did very well at managing his capital, keeping the bank afloat, keeping investors happy, and keeping investors confident in the financial in the institution. So I think overall he's the best CEO in the banking sector. Warren Buffett himself has given him a lot of praise, even in the annual letters and a couple of the meetings. He's talked very highly of Jamie Dimon and JP Morgan and Chase. So to be completely honest with you guys, I'm kind of surprised that Buffett doesn't own JP Morgan and Chase. At least I don't think that he does. I've done pretty in-depth dives on his portfolio, and I don't think JP Morgan Chase has come up. I do know that he owned Wells Fargo, Bank of America, and U.S. Bank for quite a while, and he does still own a pretty sizable position in Bank of America, but I don't think he owns JP Morgan Chase, which surprises me. Maybe he thinks it's at too much of a premium, or maybe he just wanted to get a smaller bank in the portfolio? I'm not 100% sure. But guys, let me know down in the comments below, what banks, if any, do you guys want to buy right now? I mean, this is a screaming buying opportunity for banks. If I had any expertise in this sector, I would definitely go ahead and buy something in this sector. For myself, I actually don't, so I can only kind of speculate, kind of give my 2 cents and my reasoning as to why I would personally, if I had to buy a bank, I would jump into JP Morgan Chase. But guys, let me know down in the comments below, what banks do you own? Have you added any? Have you added any to your watch list? I know a lot of people right now are kind of iffy, they're nervous or scared. I know institutions are selling out of bank stocks, which really helps the little guy. So guys, when institutions sell out of something and there's a crater in the market, like a 27, here's the thing, so regular investors like us aren't going to make a stock drop 15, 21, 24, or 27% in a month. That's institutions. That's the ETFs. They're selling out of banks. They're moving out of financials and moving it somewhere else that they consider safer. And so, guys, this is a golden opportunity for banks. For me, I know there's a lot of weakness in all of these other banks, in U.S. Bank, in Wells Fargo, Bank of America, Citigroup, but I think that the premium is worth it for JP Morgan and Chase. I think I'd sleep easy, sleep the best with JP Morgan Chase in my portfolio. But guys, let me know what banking stocks you're looking into. Let me know if you have any of these. Are you cost down averaging? Because this has got to be like a beautiful black swan event for the banking sector. This is the time to be jumping in and buying more. Personally, I think the best bang for my buck right now, even though it's not down as far as the others, I still have a $20 upside with JP Morgan and Chase, plus that dollar dividend per quarter, and a pretty good dividend growth rate, as well as the management is stellar. So just overall, I think JP Morgan Chase is the best bank, and that's where I would be putting my money. But let me know, guys, what banks would you buy? Thank you so much for watching, guys. Remember to hit the subscribe button on my channel, That Dividend Guy. It helps so much for the channel, and it pumps me up. So it keeps me posting, keeps me ecstatic about posting videos, and keeping consistent for you guys. So thanks for watching, and I'll see you guys in the next video. Take care.